Hey everybody, Matt Covey, Covey Real Estate, coming to you today, monthly market update video. It's January 2026. Happy New Year. Hope everything goes well for you in 2026. And here is what happened in December of 2025 with real estate, but also just overall in 2025 in real estate in Ottawa and the areas surrounding Ottawa. Folks, one thing I want to add before you get too deep into this video, I'm using stats from the real estate board. You're going to see a lot of different stats out there, some coming from the Canadian Real Estate Association. I'm using stuff from the real estate board, a tool called Habistat. If you have questions, reach out. Back to the video. Here's the first big thing. So three big things. First big thing, price-wise. So overall, the market went up around 1%. And that means December to December of 2024 to December 2025, overall prices up 1%. That changed depending on the type of house you own. So if you owned a single family home, you were off about 2%. If you own a semi-detached home, it went up almost like 12.5%. If you had a townhouse, it was around the same, just went down a little bit, maybe 0.5%. And if you own an apartment, it went down a couple percent as well. Month to month, November to December went down. The prices went down. That's seasonal. It happens every year. It's just one of those things. January, December, somewhere in those months, it goes down right a lot. But overall, if you take the average, all of the sales that happened in 2025 and the average price of those sales compared to all of the sales in 2024 and the average price of those sales, you're looking at around a 2.9% price increase in Ottawa. All right. And again, single family, those detached homes, semis led the market, but it doesn't give you that big swing. Like the semi-detached didn't go up 12.5% average price for the year. And it went up only around that just over 3% again. So, Matt, you're probably saying like, Matt, what's the difference and why is there such a difference? Well, here's the deal is the month to month swings. When you're comparing just the average sale price in December to average sale price in December, it could be that those prices differ considerably. But when you then sort of homogenize, when you mix the whole year together at all the months and all the sales, that can give you a more smooth line instead of a jagged line up and down, right? And that's where I'm getting this more. Ottawa had a healthy price market. In most markets, you either stayed the same, went up a little bit across all the different segments, detached, semi-detached, row units, or condo apartments, but you smooth out into an increase, meaning Ottawa still had, which is what would be expected in Ottawa, a pretty good year in real estate, all that considered that other markets may have adjusted in other areas. Second big thing is inventory. So what you're going to notice is in the news you're hearing, and you are going to see this a lot, there's more houses for sale right now. There are more than there was last year, but there's still a fairly stable number of homes for sale. So has it gone up? Yes. Is it crazy like every other house is for sale? No. But what's the actual amount of houses, more houses that's for sale? So in 2024, at the end of 2024, you had around 1,830 active listings. And this year you have just over 2,300 active listings inside the city of Ottawa, in the Ottawa and surrounding areas. So pretty good amount of increase in numbers. The number of sales that occurred in December actually went down as well. So you had fewer sales that happened in December. And so when you mix this, more inventory, more active listings, the number of new listings as well also went up from 538 to 592 in December. So here we go. We're adding more new listings. We have more active listings on the market. We have it taking that there's fewer sales occurring, right? There's number of sales went down. Last December, we had 580 houses sold. This December around 521. So what does that contribute to? It contributes to there being more months of inventory, and that you're going to hear again, there's a lot more months of inventory. Overall in the market, you're looking at around 4.66 months of inventory. If no new houses came to market, if all the buyers stayed the same, you'd probably have around 4.6, just shy of 5 months of inventory on the market. It's taking around 48 days to sell a house. Last year was 45 days to sell a house. So more inventory, more new listings, fewer sales happening, and houses are just going to be on the market longer, and that only translates to about 3 days longer. But there's this much volume, it means that it's taking a little bit longer for all of the homes to sell. So there's the inventory numbers. Now, those fluctuate based on the segment again, and I'd say months of inventory, steady move up. If it was at 3 months, it's up to 4, 2 months up to 3. The big segment that moved up a lot is the condo apartments, and those condo apartments moved up from around 4 months, just over 4 months, to now over 8 months of inventory. There's a lot of condo apartments on the market, and that's pulling that number up. All right, your third big thing. This is my metric. This is a number that I use to look at the market and evaluate the market. So this is the number is sales divided by total number of new listings. And I can also do it for total number of sales divided by active listings, but it gets a little difficult to compare year to year. So we're going to go sales to new listings. What happened in December? Just comparing December of 2025 to December of 2024. So December of 2024, a lot of sales happened. And we had new listings, again, that 580 number. So when you looked at it, around 108% was the number of sales to new listing. So more houses sold than came to market in December of 2024. Compare that to December of 2025. It's around 88%, right? So 88% of the sales, 521 divided by the number of new listings, 592. And what you get is around that 88%. So it doesn't mean if you list your house, it's going to sell. It doesn't mean there's an 88% chance it's going to sell. What it means is that number has gone down. Now, what we should be doing is comparing, and it's sort of an absorption rate, the market absorption rate, number of new sales compared for the year to total number of new listings for the year. Remember, someone might list their house, might not sell for 60 or 90 days. They might decide to pull it off, put it back on the market. That's a new listing. It's been there twice. But if that behavior stays the same year to year, and then what we should be working with is that denominator, that total number of new listings that happened in the year as your base, and then that top number is total number of sales that happened in the year. What changed? So when 2024, you were looking at around 56%. And then in 2025, you're looking at around 51%. It's a drop of just under 5% that happened. So total number of new sales that happened divided by the total number of new listings. So it gives you, there's a lot of numbers that go behind it, but it gives you some taste of what's happening in the market. There's about 5% less of houses that are coming to market that are selling. And again, this is how much the market can absorb of new listings for the whole year. I like this number. I like it as a measurement of the market. I like it as a measurement of what's happening in the market. And these relists that can occur, the things that where people go and they relist their property over and over, can really create a high number. But I think that behavior stays the same year to year. It's the number of sales that are going to fluctuate compared to that. And it gives us a good basis of understanding of just how ready buyers and sellers are ready to work together, and how ready those, the sellers are to take on buyers, and what the market behaves like to sort of absorb the number of new houses coming to market. So there's your three big things. Prices steady up, depending on the measurement you're looking at, but overall year sales and to overall year sales up. If you look at December, just to December pricing, it changes. Which probably means we had a worse December, end of the year. Guys, there's a lot more crazy stuff happening. So, people are less certain. It doesn't mean the market's gone away. It just means people are maybe waiting. And that could pick up in another month. That's why it's nice to take a whole year of metric instead of just like a little month. And inventory, you're seeing more of it. There's certainly a lot more people coming to market, and the houses are sticking around a little longer. It doesn't mean it's abnormal. It just means it's a good market. And then the third big thing is my sort of absorption rate. So it's getting affected. You're seeing that difference. So that's your update. It's a big one. Monthly market updates are usually quite small, but this involves just the month and the year, putting it all together. I hope you enjoyed this video. If you know anybody who's interested in selling, buying, doing anything real estate-wise, renting, tell them to give me a call. Be happy to help them out. If you're looking at buying or selling, doing anything with real estate, be it now, next month, next year, whenever, love to have a chat with you and make sure that I can help you whenever that is. Thanks so much for watching. Like, subscribe. That's your monthly market update video and your annual market update video. Have a great 2026. Take care. Bye for now.